Well, look, I was not an econ major in college, didn't get my MBA. I did, however, take some econ classes, took microeconomics in high school, and that was AP, mind you, AP microeconomics. And in AP micro, we learned about supply and demand. And if you're a company selling goods, demand is usually a pretty good thing. And then you have insane demand, which is an even better thing. And that's what we'll talk about today. Some insane demand comments from a CEO last night on CNBC. We also have some earnings to talk about. Levi's, not great so far. Some people taking some profits in China. The clean tech energy sector that is heating up. We'll talk about it all today on PreMarket Prep. We've got Christian Fromhertz coming on at 8:35. So without further ado, let's go ahead and roll that intro and get PreMarket Prep started. Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All righty, traders and investors. Good morning, everyone in the chat. Good morning, the regulars. I don't need to say your names. You guys know who you are here every day. We appreciate you. Let's go ahead and get my Benzinga Pro pulled up here. It's still loading right now, so give me 1 second. My internet's being a little bit slow today. But as we head into the open here, I'll just give you a quick lay of the land where we stand right now. The S&P 500 futures down just a tad, just a little bit. We've got this big jobs data coming in tomorrow. Qs are down 0.14%, 67 cents. The DIA. Why won't Google doesn't want to tell me what the DIA is. Down. You got to actually type it out now. DIA is also pretty flat here. Let's go ahead and bring Dennis in. Dennis, how are you doing this morning?
Tigers. Wow. Look at that. Wow. The gritty kitties, Ryan Faluna. Holy. Unbelievable. They were looking like they were going nowhere about 6 weeks before the end of the season, and then they went on the incredible run, and the incredible run continues here, AB. It continues. We're now officially in the playoffs. The official playoffs.
Well, yeah. I mean, we made it to the ALDS.
I would consider.
I think that's.
It's like to get in the playoffs.
You made it to the postseason.
You did make it to the postseason. I consider the playoffs starting though now Saturday. So, and you're going to the first game.
Well, the first game won't be in Detroit. The games when they come back, I think they're playing Cleveland. When they come back from Cleveland, they will. I
thought you said that you were.
No, I got tickets to games 1 and 2 of the games in Detroit. So whenever that comes, I'm not going to go all the way to Cleveland for it. But everyone's been like,
I forgot because you're not in the D.
What's that?
Yeah, you're in the D. That's not far. Yeah, you're in the D. What am I saying?
From Cleveland?
Yeah, that's not far at all. Hop in the car.
I don't know. I mean, if someone invites me, if someone in the chat's in Ohio and they want to bring me to the Guardians Tigers games in Cleveland,
it's fun to go on those road trips there when your team's playing and be the bad guy in the stands, wearing all your Tiger gear and your Tiger claws.
So I have a stat because everyone's been like, "Oh, how surprising has this run been?" And it is surprising. I don't want to take anything away from it, but. I've in a way been there before, so I don't want to, it's like I'm like, I'm not accustomed to this, but I've got this stat for you, Dennis. So the Tigers are the 4th team in history to win a playoff series, and this is ESPN, so they are calling it a playoff series, the wild card. Here, I actually got it pulled up right here. The 4th team in history to win a playoff series. Here we go. After being 10 plus games back of a playoff spot, at least 110 games into the season. The 2011 Cardinals was the last one to do it. 1969 Mets, 1964 Cardinals. All 3 went on to win the World Series.
Holy, this is a good stat. I like this stat.
So I, of course, wasn't around for these 2, but the 2011 Cardinals World Series run, I remember very vividly like it was yesterday. We were 10.5 games back as August ended going into September. We chased down the Braves. We played, every single series that year. We were the underdogs. We played the Phillies, beat them in 5 games, beat the Dodgers in 6 games, I want to say, to actually go to the World Series, and then ended up beating the Texas Rangers in probably the most thrilling World Series of all time in 7 games. That's, of course, the famous Game 6 where David Freese hit the walk-off home run. And yesterday, when the Tigers went down and then came back like immediately after, so they let up 3 runs in the bottom of the 7th, and then immediately came back in the top of the 8th and went up like 5-3 or whatever. I was like, man, this feels a lot like the Cardinals run, because every single game that postseason, just when you felt like it was over and it was like, oh, the magic is ending, they came back right away. So, I know we're going to move away from sports, but
this chat has the Tigers won the first series in 11 years, and we wanted to talk about it for 2 minutes. So you chat, these sports haters out here, they hate this. Like, this is not stocks and jocks. Get to the stocks. Okay. Insane demand, right to Nvidia, insane demand. We don't stay. Wow, we love you. Red Bull, we love you. Alyssa, we love you. Don't leave us. We're going to talk. We're talking stocks right now. Nvidia.
All right, last thing on the Tiger. No, I'm just kidding.
Don't say it. We also have 5 people. JJ likes the sports talk, though. So if Joel was here, the sports talk would have continued. But Nvidia. Jensen Huang on CNBC last night in a co-interview with Accenture CEO. I don't know the Accenture CEO's name. Sorry. Talk, about the Accenture deal. Accenture's popping on that. We already knew the Accenture deal, but the masses don't read the Benzinga Pro. If they'd read the Benzinga Pro, they'd already know that. But they should be reading that because we already knew that. So there's talking about this deal, which we already knew about, up $8. So I was able to actually make some money on that. But Nvidia was kind of just sitting around for the most part until they asked in the interview, about the business. And what Jensen Huang said was, his quote was, Blackwell demand is insane. And when he said that, Nvidia blasted off $2. It was just gone. That's exactly what you want to hear from a CEO in a live interview, that they're insane for their main expensive product is insane. And demand is insane. So that's why, if you're looking this morning, S&Ps are somewhat weak because everything is weak, but you can see Nvidia lifting. Obviously, Accenture we already talked about. We got nuclear stocks lifting again. The sneaky AI trade looks like it's going to come back on. And when they say something like that, demand is insane, I don't think it's one of those like all of a sudden, they just come in and they sell the rip, because this is, coming right from the CEO. It was said, obviously, on CNBC. I don't think this is going to be one of those times where Nvidia pops $2 and then just gives it all back. So I actually think this, could help lift the stock here, maybe more than a day.
Yeah, and I mean, right now we've known that Nvidia, I feel like the demand has never really been in question, though. It's more just about can they produce enough of these Blackwell, AI chips? They've had some comments regarding the production and potential setbacks and all this stuff. I mean, I guess I'm not surprised by the comments by Huang, and I'm not necessarily surprised by the reaction, but I guess it's just surprising to me that almost like the insane demand isn't priced into the Nvidia stock already, because I think we've kind of known that, right? Every single one of the major tech companies out there, whether you're talking about, Google, Microsoft, Meta, they're all buying these chips. We know the demand has been high, but I guess once you just get those comments directly from the CEO, the market is going to like that.
I think there's been a concern that there has been pull forward, though, where, this demand is eventually going to slow down. We know in the last year, demand has been insane for all NVIDIA's chips. We know Blackwell, the newest one, we know there's big demand for that. But, everybody's still concerned. They're like, when is the growth going to start to slow? We're paying 40 times or 38 times earnings. It's got to start slowing here eventually. And when you get that hint of slowing growth, that's when stocks collapse. So he kind of green lighted that it's not slowing at all. It may actually be accelerating. And that is a big comment. Like I will say, technicals move stocks, but and especially in the absence of news, so when no news, it's all technical. But when you have, fundamental news and you get a fundamental statement from a CEO like that, that moves stocks more than anything. And direction doesn't have to be figured out from a chart. So it's not surprising to me right now. I'm still long Nvidia in the long-term account. that Nvidia is trading up $2 on this and continuing. Like, we had overnight weakness. China got the beats. Europe is down. You'd think that'd bring down the S&Ps at one point in time. We're down 20 handles. You'd think that would, knock, Nvidia off its keister a little bit. It has not. Nvidia says will not relent. And now it's actually at its pre-market highs, really. If we look at the pre-market chart here, maybe you can go bring that up here, AB, because it's nice to look at the pre-market charts.
For
you can
Nvidia.
see we're actually moving to the high of the session here. So I do think that comment maybe ease some concerns that growth, could potentially be, slowing down a little bit. It's not. It might even be accelerating. That's a big statement from the CEO. And I think the market is listening.
Someone in the chat was saying that Jensen Huang is a great CEO. He's also a good smoke blower of sorts. And someone else called him a used car salesman. I mean, like, here's the thing about Jensen Huang is he's basically put his cards on the table and been saying stuff for the last, like, if you've followed the Nvidia story for a while, for the past like 5+ years, Jensen Huang has basically told investors, like, hey, once like AI starts getting adopted, we are going to like run that, and we are like the top dogs, all this stuff. And I'm sure people thought he was blowing smoke back then, but he's just been right the whole time. Like, I don't really get that perception of Huang that he necessarily cares about like the short-term moves of Nvidia's stock enough.
He doesn't care at all.
No, and I mean, he was selling stock, but that recently has stopped. And I think like those are all planned sells. So like, I just don't, there are CEOs out there that like to talk to try to like prop up the stock price. I don't think Jensen Huang is one of those CEOs.
I don't think he is either. I mean, Elon Musk is one of those CEOs. Jensen Huang is not. I think he's just about, running the company and running the business. And, people can read a lot into, selling stocks. Oh, he thinks there's a top, but again, I think it held the stock down. Again, when you got this many shares, at a certain point in time, you want to live life a little bit too. Maybe he wants to go enjoy himself a little bit, spend a little bit of the money. I mean, you can't spend it when it's just sitting in your stock. We're not all like Warren Buffett that just, lives in the same $500,000 house he bought, 35 years ago. So, I mean, not everybody lives like that. So some people do like to spend some money. I think Nvidia, I think it was obviously, we've been in a consolidation period, and that's, something to consider as well, where, this stock has really gone nowhere for almost 6 months here now. We can go back all the way to like June, May, maybe not 6 months, but at least May. We're back to where we were in May. So May, June, July, August, September. We're approaching 5 months of consolidation here where we've kind of gone nowhere.
Yeah, kind of
barcoding. Do we resolve
here
eventually to the upside? That's a question of the chat. That's a question of UAB. I don't think the story is over, and I think we do eventually resolve to the upside. It's why I'm still holding a core position in Nvidia, despite obviously, having sold, a lot up there at 130 because I just thought it was overdone at the time. I think we could potentially, and I've said this already on PreMarket Prep earlier.
Breaking out right here too on the 2-minute chart.
Yeah, we could potentially go out this year the same way we went in, and I kind of think that's what's going to happen with AI leading the charge. So difficult to just bet against a company when they say their demand for their main most expensive product is insane. That's difficult. So if you're short the stock, when you heard those comments, you got to be like, If I was short, I'd be like, cover, buy.
Carmen,
and it makes me want to buy. It makes me want to go long.
Carmen in the chat's putting a good, this is a, good thing to point out here. So 2 mines of only supply of pure quartz for chips are shut down in North Carolina with no idea of when they open. So after Hurricane Helene, this small mining town in North Carolina, Dennis, called Spruce Pine, is like the only supplier of pure quartz in the world, which is used to make the silicon wafers of the chips. And I was reading about it, and I guess you can use like quartz from other places that's not as pure, but then you have to go through this whole process to like melt it down and actually use it for these silicon wafers. Okay. And so like they're saying if long-term these mines are shut down, it could be a very big headwind for the semiconductor industry. Now, I don't know exactly like how, obviously we know the devastation has been terrible from Hurricane Helene. I don't know, how long these mines are going to be shut down, if it's something to really worry about. Right now, it's like on my scale. It's just something on my radar, not something I'm like immediately worried about. But I'm going to keep following that story because, again, that town is called Spruce Pine. I believe like the company, one is just called like the Quartz Mining Corp, and there's another company there, like the two companies that do that in North Carolina. So something to watch. Again, not something I'm like, threat level 10 on right now, but it's just on my radar.
Yeah, that's good stuff to know. Obviously news anticipation is a big part of my strategy. So when we can, find out information like this, because it's impossible to find out of like, pending, supply shortages and stuff, you can make money from that too. Now, I'm not saying this is the day to come in and, but I think, just being aware of potential shutdowns is, something as a trader you should be aware of. Continuing on with this whole, obviously AI theme, nuclear has been, maybe the biggest benefit here in the second half of the year. We've seen stocks like Constellation Energy, Vistra running. That continues this morning thanks to Google. So we've got Google coming out, and they're talking about going nuclear for their data centers as well. And that's got all the nuclear stocks ripping here this morning. We got Constellation Energy, CEG up another $10. We got Vistra Energy up another $3, up another 3%. CCJ, Cameco in Canada is up another 3% here this morning too. And then, if you're just looking at uranium, URA is trading higher here. You had a small one you were talking about, OKLO, which is up 7% here this morning.
Yeah, we had some people in the chat talking about this as well. I believe Jay Woods last week when was discussing this. This is a Sam Altman backed nuclear startup that was a SPAC, as you can tell by the chart, just at $10 forever, and then obviously spiked higher here after it did its merger with Oklo. Got all the way down to around $5, and it has now just come ripping back on the last 2 weeks after this nuclear story has heated up. And then remind me, was it Microsoft that announced a deal with Constellation Energy a couple weeks ago?
Yes, it was. That's what kickstarted the CEG rally. So that's the big gap up you see in the chart, 202 to 240 in a day. And then it's consolidated. And if you look at this chart, and sometimes technicals do tell a story. You look at this chart, has a big move, then the consolidation period ahead of the move. Now it gets a headline to spike it up to new all-time highs here again. As I always say, you don't want to be shorting stocks making new all-time highs. It's just not the gig. It's natural human tendency to want to sell what is strong and buy what is weak. But I'll tell you, in this market, you're punished for doing that. You got to break that human tendency. You're shorting stocks making new all-time highs. You're asking for problems. Constellation Energy with its Google headlines going to get talked about here today probably. It's up 9. Not saying chase it. I hate chasing stocks, but I could see this thing continuing on here this morning.
And I mean, right now it seems like, I can just buy any name in the nuclear space and it's going up. What I think long term we're going to see is that more and more of these companies that are specializing in the small module reactors that can basically do these like private deals with a company, like, Google wants to build a new AI server and they want it powered by nuclear. Okay, they can go to Constellation Energy, get like a small modular reactor going, and that reactor specifically powers this AI data center. I think you're going to see that adoption a lot more quickly than say like, a company that's specializing in like larger reactors, because there's just more regulations. It's harder to connect that to the grid. It obviously will take like state and local government action, whereas these private ones, the private deals. So someone put SMR, which is, the ticker. The ticker symbol there stands for small module reactor. So that one could be one to look at. There's also one I was looking at, BWXT. And this one, Dennis, specializes in like restoration of nuclear reactors. So they can get one going again that has been shut down for a while. So that one could be interesting as well.
BWXT?
Yes, BWXT.
So let's move it. Get a whole list. Right now, you write down all these stocks, your nuclear list, stocks that are moving on this. Spinner is giving us another one too from the chat. That's why I love the chat. They give us these good stocks. Centrus Energy, LEU, is a uranium producer, nuclear power in the States.
This one's taking
off here. So obviously CCJ is a big one in Canada. LEU is a big one in the US. This is one from 40 to 67 in a straight line here in basically 10 sessions. Now, again, if you're coming in now, it feels like you're late to the party in some of these trades. So just be careful because, stocks like these, uranium producers typically don't go up in a straight line like this. But we know, stuff can continue too. So if you're a momentum trader, you can play this stuff. Just, have your stops there. When the momentum turns, it turns violently. So just be careful on that. But having your list here of these stocks is very important, because all these stocks move together. And when you get a headline from Google, I don't know if we ever actually read the actual headline, but
I
when
tried
you get
to
a headline from Google, I parsed it just because I had read it earlier and I didn't bring it up. But anyways, they're looking to nuclear, and that's why these stocks are popping today.
I mean, this is just completely anecdotal, but I was texting my buddy about Oklo and some nuclear plays yesterday, and he works in investment banking, specifically in the clean tech sector. And he said was just on a call with a few other funds on how nuclear is the one sector in clean tech that's too hot. So I was just anecdotal, but I guess he said that some of these funds we're talking about, that some of these names are too hot right now.
Well, I think that's if you're coming in and investing in this theme now, you're definitely late to the party. I mean, CEG back in April, $75. It's $275. So as much as I think it could go to 280 or 290, again, if you're a long-term investor, you're coming in now, you probably got to wait for a dip. You probably got to wait for the story to cool off, because what happens, it's a natural cycle of, stories, in the stock market. They get hot, the stock spike, then people start talking about something else and they dip, as not demand. But then something else happens and they spike again if the stories are sustainable. I mean, that's what's happened with Nvidia multiple times. It's what's happened even on CEG. I mean, CEG was being talked about earlier in the year, had a big run up, went from 100 to 220, and then sold off significantly down to 155. That was the buying opportunity. Buy the dips when the stories cool off, but you want the stories not to be ice cold, just cooling off. Meaning, not like a Celsius, where there's a potential that this story is almost like over. You want to be buying storied stocks that the story is probably going to get hot again. The AI story, we said this for the last year, is not going away, folks. People were comparing it to blockchain, comparing it to whatever COVID stocks, this is just the story of 2024, and we won't even be talking about AI in 2025. I think that's wrong. I think obviously AI is going to be a big part, and I think people are realizing it now. And that's why when you're buying these AI stocks on dips, you're making money, because this story, as much as it's hot, and as much as maybe some of these stocks have gotten overpriced, the story itself is not going away anytime soon.
Yeah, and I mean, part of it is like the market does get, carried away sometimes with some of these themes, like you mentioned, the COVID stocks or metaverse stocks, blockchain stocks. But the market also gives you inklings, gives you signs when something is happening, and that's kind of what I feel like is happening with the nuclear story right now. Is the market's kind of telling you like, oh yeah, this adoption now to power some of this AI stuff is happening, and it's happening pretty quickly. And so maybe in the short term, yeah, some of these names have run too much. But I mean, like you're seeing the fundamentals where like all of a sudden they're talking about opening this reactor back up. They're talking this, Microsoft is doing a deal, Google's doing a deal. And like next thing I mean, so I think the market's kind of, again, like telling you that, hey, this is a theme that is going to happen. And if it wasn't, like, why would Sam Altman, who knows more about AI and where AI is headed, like I trust the fact that he's invested in this Oklo company, that he knows like this is going to be a wave in the AI story. So again, is Oklo a little overextended? I saw Jay Rice in the chat saying the fundamentals suck. I'm sure they do, because I'm pretty sure the fundamentals for every single SPAC are not great. I can't say that because there probably are some that are decent.
Some turned around. SPACs have been tough. We know, because a lot of these companies just came at valuations from 2021 that really had no business of.
I think DraftKings was a SPAC. That one's been somewhat successful.
There's been a few good ones, but we know the majority of these SPACs have gone down, and that was the time. Like again, the bubbles all over the place in 2020, because in 2021 were insane. Like as much as Blackwell demand is insane, the bubbles that were happening in 2020 were insane. When we had stocks just blasting off, every SPAC was just ripping up. They'd announce a deal, they'd go up 100%. It was all just, ridiculous, and when we talk about that, at one point in time, like I remember, if you go back to the show, I don't know which show it was, but I remember saying in 2021, I had like 90 stocks in my long-term portfolio. Yeah, 90 in my long-term portfolio. I got down like 30 now, but I had like 90, and I was looking in 2021 and I was up on 87 of them. And I said that day, I'm like, this is not normal, folks. It is not normal that every single stock you're making money on. It was like when Portnoy was saying, just throw darts and put 3 letters together and you buy that and then you make money. That's what it was. everything was going up. It wasn't that I was a good stock picker. Not at all. It was just everything was going up. And if you were long anything, you were making money. That's not the market we're in anymore. It's now a stock picker's market. You've got to get into the right stocks, the right stories, the right fundamentals. Because when you're in the wrong stuff, you end up on these Celsius bandwagons. I know I'm picking on Celsius, but it's been an epic disaster. So we're not in that market anymore. You've got to pick your stocks, and that's a difficult thing.
I might take a stab at Celsius down here.
You can take a stab at anything. What I will say is, and I've always said this, you can buy any stock, anytime. The one thing you've got to do is have your out. So whenever you're putting on a position, say, okay, I think 30 is going to bottom. Give yourself to 28 or give yourself, depending on what your risk reward. And I've always set up 2 to 1. So if I'm like risking $2, I want to make $4. I always like the risk reward set up there. You can put on any trade you want as long as you have an out. Think about rounders. Always have an out. It's a fantastic movie. You've got to have outs. And if you're like sitting here and saying, well, I didn't want it, and Celsius all of a sudden comes out with bad news, this is what happens. People buy it at 30, and they're like, I'm going to stop out at 29. And then they hold it for a couple of days, and it comes out with some bad headline, opens at 28. They're like, well, I can't sell at 28 because, I was only risking $1. So now I've got to hold it till it comes back to 29, so I can only lose my dollar. And then it goes 25, 23, and all of a sudden you're a bag holder. Don't let a trade become a long-term investment, and don't become a bag holder. So buy good companies, reasonable valuations. Catching the falling knife is a dangerous strategy, but you can do it as long as you have outs. I mean, it worked yesterday with Humana. We talked. Joel gave you a fantastic level. Joel's not here today because it's a Jewish holiday, but a fantastic level he gave you at 208. It never got there in the regular session. It did get there in the pre-market and bounced there, got down to 213. But if you're playing it off that level, that was completely catching the falling knife, and it worked. But that doesn't always work, folks. And sometimes catching the falling knife is the hardest trade.
I want to propose a new segment for pre-market prep. I just got this idea going through some of these stocks called AB's Dumpster Dive, where I go in.
Nice. I like it.
I find a stock that's got to be down. We got to set some parameters. Say it's got to be down
like 90%.
No, that's gonna be too hard because those are all
dumpster diving with AB.
Yeah, and I've got to find a stock that's down like 50% from the highs that I have to make like a real pitch on it. I have to be like, all right, this stock's down. Here's why it's down, but here's why I think I could buy it here, and I could probably put together an argument for Celsius.
So Celsius is your first stock here today that you're picking.
Or like,
do you own any Celsius? Have you bought it yet?
Well. Okay.
He owns a little bit of Celsius.
I bought it. I had my so my guy who manages, like, I have one portfolio that's managed with a guy at Morgan Stanley.
Yeah, we're gonna fire him, and you're gonna become the manager because we do this show so you don't have to have money managers.
I know, and the fees. I've looked at charts over time of like.
It's time for you to come to us.
And my guy, he's like my friend's dad. So he's, probably like mid-50s or something, maybe a little bit older. But one of his like big winners in his career as an investor was Monster. Like, I think he invested in Monster a long time ago. And then the stock just like, I don't know why that chart doesn't go back.
Been a monster.
But Monster stock, if you look at like the all-time chart, is like one of the best performing stocks on the market over the last 20 years.
Yes.
And I basically like pitched him Celsius, and I was like, dude, I'm telling you, trust me, kids are drinking this. They're not drinking Monster anymore. You got to buy this. So I think he bought it in my portfolio and might have bought it in other people's portfolio too. And then the stock went down a lot, and he texted me like, sarcastically, like, "Oh man, great call on Celsius." So like, not only did I lose money on it, but I put my like I'm like, every time I like see a stock, and I was like, oh, maybe I'll text Rob and have him. I'm like, oh no, I'm not going to text Rob because I saw what happened last time we did that. All right, I do see our guest hanging out.
It's just dangerous. Yeah, we're going to bring Christian here in 1 minute. We don't have an 8:30 number, do we? I always get scared now because all these 8:30 numbers. I didn't have anything on my sheet written down, but
initial jobless claims.
So we do. So I got to go wide for that or not?
Yeah, but I mean, okay. So we've got so.
I'm not going wide.
No,
HFTs can pick me off left, right. I'm staying out there.
Because we have the real labor data that we care about tomorrow. So I think like today might be a little bit more muted just because we do have the big labor report coming in tomorrow.
HFTs are gonna feast on me right now. They're gonna be sold. I'm like, why didn't I go wide? We're gonna see what happens. So here we go. 5 seconds till weekly jobless claims coming up here, and then we're gonna bring Christian on right after that because Christian's ready here too. S&Ps are doing nothing, thinking about going up, thinking about going up, thinking about going up. They're thinking about going up a little bit. We're up 3-4 points. Maybe I should cancel. Maybe I should cancel. No, I'm okay. I think I'm okay.
I still haven't
Not
seen
going
the
up too much.
exact. I might have missed
Bring
the number.
Christian.
All right, let's go ahead and bring Christian Fromhertz, one of our favorite guests here on Benzinga Pre-Market Prep, of course, from Tribeca Trade Group. Let's go ahead and give him our special intro and see what Christian's been looking at when we get back. All right, Christian Fromhertz, welcome back to Benzinga's Pre-Market Prep. How you doing this morning?
Good, guys. Great conversation. I was listening, behind the scenes over here, and great conversation about some of the dumpster dive stocks.
Would you watch that segment, Christian?
I would, because everybody's a different type of trader, and I'm a trend trader, and I try to stick to uptrends. That's mainly what I do. I try to stick to really strong trends. But however, I do miss out on some of the things that could be some really good buying opportunities if you've got the right time frame, and if you've got the right position size as well. Because some of these things, and we just experienced this over the last week and a half with all the China names. The China names, you've needed patience, like a crazy amount of patience.
Yeah.
And when I listened to the David Tepper interview, he was talking about like how he loved China back, I don't know, it was like a year ago or earlier this year. Regardless, it's still a long time to be sitting and having that conviction with those names. And I know that you guys have been sitting long some of those names too. And, that's not easy to kind of just sit. And as long as you have it in the right time frame, because those names just acted horrible for the last couple of years. But if you've got the right time frame where you can have that patience and the right position size, I think it's definitely worthy exercise. I don't know if you need to do it every day, but I would certainly be listening to what what your thought process is on a Celsius or on a name like, and
Lululemon.
yeah, exactly. Like, and Dennis, you mentioned like, as long as you have an out, like, and that's the main thing I think for traders, especially for younger traders, right? And we all want to make money in this market and profit and so forth, but you always have to focus on your downside risk, and you have to have a game plan. Go before you click the mouse and say, "Hey, I'm into this stock." What's your game plan? What are the scenarios that you think this stock is going to do? And it could be something like a Lulu or a Celsius. You really need that long time frame, and you also need to know like when to throw in the towel, I think, too.
I mean, that's the main thing. It's like just knowing when this trade doesn't work out. I mean, I know, Christian, you have great risk management. You look at that, and I mean, it's difficult sometimes to call it. Like sometimes you're in a trade and it's not working out for you, and you're like, oh, I kind of think it might work out still a little bit, but you kind of almost have to have that risk defined before you enter the trade so that you don't talk yourself into staying in it. And then all of a sudden, a little loser becomes a big loser. I mean, this is such an important conversation. We could talk about this for an hour, risk management and discipline. I mean, this is everything in trading. I don't make money because I'm a great stock picker. I make money because I cut my losers when I'm wrong. That's the truth.
And thank you for the compliments, but yeah, I mean, every trade, it's already defined about what's going to happen. I mean, in terms of like what the different types of trades. Either you're going to have, which we all want, number one, a big winner, number two, a small winner, and then there's the other side of the equation. It's either going to be a small loser or a big loser, and I try to avoid the number four as much as possible. I don't want the big losers, and I'm okay with the small losers and the paper cuts and so forth, because that's trading. And I think you get to that maturity level in trading where your ego is really not involved as much, and you just trust your game plan of saying, okay, well, this one's a loser, but it's a small loser. It's a small loser. And those, I've tried to learn that from professional traders and some of the greats out there, and just saying, yeah, I mean, we're all going to have losers. You just don't want to have that number for those big losers, or a lot of them, even worse.
So, Christian, earlier we were talking about the nuclear trade, which has been hot. A lot of the nuclear names are running. But I kind of want to zoom out for a second and just talk about energy more holistically here. I'm going to pull up the XLE, and obviously, we've got some tensions, to say the least, going on in the Middle East that are, causing some uncertainties in the energy market. What is your outlook here on XLE, and kind of what's been your thought process here?
Yeah, I mean, my thought process is in one of the portfolios that I manage has a bit or right around like 50 names in it, right? And that's my longer term portfolio. It's a trend trading portfolio, but it's something that Tribeca Trade Group members can access and also participate in. But I've really been underweight energy because it just hasn't been doing much. Now I've been monitoring and every once in a while I've been like dipping a toe into an energy name. There are a couple names like TRGP that's been acting really well and is in an uptrend, but for the most part, it's been a very difficult trade. However, maybe it's time that we start to see a little bit of rotation back into this group. And of course, there's geopolitical. I don't really like to get that involved with the geopolitical concerns, but it doesn't seem like these things are going to be going. It doesn't sound like there's going to be resolution like tomorrow or a week from now. So I just think that it's time to maybe start getting a little bit into the energy group besides what's really worked well, which has been the nuclear trade and the power trade, which I have exposure to that as well. And we can talk about a couple names. I like NEE in that group too. But I think it's time to be looking at like if you look at a weekly chart of Exxon, I like charts that have been in uptrends for a long time. Sometimes they put you to sleep for like a year or 2 years because they just consolidate. And I think when you look at that weekly chart of zoom out,
Yeah.
you'll find that it's really some nice digestion that's going there, and even you're kind of looking, it's like an inverted head and shoulders. If it breaks that headline, I think you're going to start to see this begin to trend back up rather than just go sideways.
Well, look at Exxon compared to the other oil stocks. I mean, it never really sold off. Like, I mean, you got Buffett's Oxy that's been down, 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 down. I mean, Chevron, I know they got the Hess thing going on. It's not been a great performer either. ConocoPhillips is off the highs. There's ExxonMobil sitting up there, not far off the highs at all. Relative strength here is absolutely incredible for XOM. And I do think, you're on a breakout here. And I do think there's a story here because, we've been, China obviously was sleepy value stocks. I mean, oil, I made this comparison yesterday on pre-market prep. I'm like, the oil trade kind of feels like the China trade to a certain extent, where they've been lulling you to sleep for a couple years here now. And you have. I mean, ExxonMobil's gone nowhere really for 2 years. But all of a sudden, you have stocks that have decent dividends, good valuations,
Right.
and all of a sudden, you've got a catalyst. And that catalyst is this, tensions in the Middle East is escalating.
Yeah, and I think also from a positioning standpoint, I think everybody else is kind of in a similar boat in terms of have gotten, the energy trade just hasn't worked all year long. So that's why I've been doing this now for a few months where I've been looking at the group and saying, hey, when is this group going to get going? Like even we saw for a while low volatility stocks really get going, and there's an ETF called SPLV, which had great performance for a couple months because it was areas that you just mentioned, like high dividend names also have done really well, but it's areas that have been like the insurance stocks, which have been on a tear, and other financials, other utilities obviously have done really well. So this is like energy is normally that in that bucket too. It just hasn't participated yet. So that's kind of what I'm looking in. And again, I think, going back to what you were saying about a stock pickers market, you don't have to get like, I'm not getting way overweight energy stocks. I'm just starting to allocate a little bit of my portfolio back into something that I was really underweight and saying, hey, I still want to be in an AI name. I still I want a chip name. I want, was also mentioned like a couple names like private equity names look really good, like a Blackstone and a KKR. Those things look pretty good. So I think right now you can be in some, a bunch of different areas, but you can, and this is what I do with my portfolio. I just kind of change the sector exposure a little bit to get a little bit more into something that's beginning to kind of change a little, and move a little bit, and begin to outperform the market.
All right, some other names, Christian, I'd like to talk about. Palantir. We haven't talked about Palantir too much on the show. We know it's a retail favorite, of course. Breaking out recently. Is this one that you've been in, or how have you been trading this one?
I just, this is another one that I added just about a week ago. Very small allocation to my portfolio. It just, has the strength. Obviously, it was added to the S&P, but if you look at the daily, like if you look at yesterday's candle on the daily chart, it just had like really nice performance yesterday in a market that was very choppy yesterday. So it spent a little bit of time digesting after that S&P inclusion, and I think it got like a downgrade from a broker or something like that, but it's starting to turn back up. And that's really what I pay attention to, is names that kind of have are in a nice trend, but then begin to kind of digest. They move back to like a 20-day moving average. I use value areas, so like the top of value, but it had a really nice daily candle. So if you go to like your daily chart, you'll be able to see that. Yeah, and then just zoom in on that candle right there. There you go.
Right here.
Well, no, go to yesterday's. Yeah, right there. So see
Okay.
how that's like a bullish engulfing candle. It's the price action started lower on the day, and then it engulfed the previous red candle. That's a bull. That's for the day. That's that's a bullish sign. So it tells me that it may be beginning to turn back higher again and resume that trend back up.
All right. What about Blackstone?
Yeah, so those private equity names are doing really well. The three that I always pay attention to, and I look at them in terms of like what XLF is doing. But I like this little pullback in Blackstone, and you could see that the price is starting to come back to that previous peak that was right back in there like a few weeks ago. Don't go that far. Yeah, just
Here.
right there. Yeah.
Okay.
Yeah, so so I'm starting to get interested in that from a technical standpoint, because I think this is a great place to be in financials. And look at the next one is KKR, which the pullback is even less in KKR. And again, like, so these are things like that I want to sit in, and I want
Yeah.
to but I want to be buying the dip. But again, it didn't even pull back that much, but it doesn't have to. Like, you don't need to pull back all the way back from the beginning of those green candles a couple weeks ago. It may just do that like bull flag type pattern. So and then Apollo is another one too, but I generally stick with the KK. I own both KKR and Blackstone. APO would be overkill for me, but that's another one that's been doing
Who
very
did
well.
Apollo just did a deal with someone? Who was it?
Well, they're always doing it. They're always getting involved in buying someone else's business, or taking somebody out. Like, they do these big deals, and they're just faster moving than what like the traditional investment banks are doing.
All right. And then you mentioned the nuclear space. You said you were in some stocks in that one. NEE was one that you gave. I mean, we were talking about it earlier on the show. As if this run is overdone in a short term, or if this is the start of a new breakout in all these stocks. What is your kind of outlook on this sector?
Yeah, I mean, I think you want to be in them, and you want to be there to kind of buy dips, and you just haven't really had the chance since the Microsoft news with CEG. You really just haven't had the chance to be able to kind of buy the dip, and that's sometimes what strong names do. They don't let you kind of get, once they start going like that, they don't let you get in. I like this one. It's not as much of a pure play as the CEG and the VST, but
Yeah.
I like the trend going on here too. It's a little bit slower moving, obviously, but I think it looks good too.
All right. Well, Christian, any other or Dennis, did you have a question for Christian?
Yeah, like I just wanted to say, I'm looking, and obvious, I'm like, asking the chat. I mean, what do all these charts we just brought up have in common here? I mean, I think you can clearly see what they have in common is Christian is buying strong stocks. Like all these stocks, every single one of them that you just mentioned, you go through the last 10 charts, you aren't looking at the stocks that are sitting at 52-week lows. You're looking at buying stocks that are at 52-week highs. I mean, there's a reason you've been successful, and it's because you go opposite to what natural human tendency is, like buying the strong. Strong gets stronger, weak get weaker. I mean, sometimes you can get into markets where maybe this doesn't work as well, but this is not one of those markets. This has been one of those where probably, momentum, even though we have dispersion in the overall market not going that far, we have certain pockets of strength. The stocks seem to be relentlessly higher, certain ones, and other ones relentlessly lower. So two questions. The question is coming, I promise. One is, how do you, find, the strong stocks? It's just running scans to see stocks at 52-week highs. And then two, how do you manage the risk in a case where your momentum suddenly turns?
Yeah, so great questions. So number one, I do look at the 4-week new high list, and I publish that. I have a Substack report where I put that out every day, what the S&P new highs are versus new lows, and I look at it not just for trade ideas, but I also look at it for to tell what the overall market is doing, if it's strong under the hood, or if it's beginning to weaken. So I look at that for a couple different reasons, but that helps me find different areas. I sort those names by sector, so I can see hey, is it a couple sectors, just like we're talking about the nuclear space or the AI space, like what's really driving the market. I also put together, and I can't believe that we have earnings season coming up again, but believe it or not, JP Morgan's going to be reporting in a week.
Yeah.
So I also have a strong earnings gap list that I develop over the quarter, and those are the names for me that are going to be new, possibly new leaders for the next quarter. Remember, a company completely changes its characteristics and its it's what it looks like in terms of if it just had a really good quarter, right? It may completely change personalities. So I keep track of those names, and I wait for those names. I either trade them on momentum if it's the first day and it's really a change in tone for the company. So those can become short-term momentum plays. They could also become names that I want to get involved in once they do dip. You mentioned also getting out of some area, being able to understand when the trade is up. There are areas there are some places where sectors where they do get tired. And the first thing I think is if something's been honoring the 20, keep it simple. If something's been honoring its 20-day moving average, if it's a really good strong trend, the one name that I'm into is FTAI that I've been sticking with, right? And that's in the aerospace group. Right. And that name has just been kicking butt. But if that breaks its 20 or its 50, 20-day moving average, I'll really pay attention to it about how it acts around there. But if it breaks its 50-day moving average and it's been above its 50-day moving average for a year, then it's changing. And it's the same thing, same thing with Celsius or Lulu. Once those names are in defined uptrends and they break their 50-day moving average, I usually just get out of the way, because that means something's happening and it's more in a distribution. So that's just a very there's other ways to do it, but it's a very just easy, keep it simple. And I like simple trading, where you have rules like that.
All right, Christian. Well, this has been awesome to get you back on Pre-Market Prep. Always come with some great ideas and analysis of different stocks. Enjoy the rest of your Thursday, and we'll have to catch up soon.
You too, guys. Have a great day.
Thanks so much, Christian.
All right, Christian Fromhertz from Tribeca Trade Group. Always
fantastic
a great
trader. Always, the discipline, and he's very consistent. And he's one of the few traders that posts his monthly results on Twitter every single month, which I really respect as well. I started doing it when I left Bright Trading a couple of years ago, because I couldn't really do it when I was at Bright Trading, because it was, you're using prop money. So it's hard to even calculate on percentages. But once I left Bright Trading, I could start doing it. So I started doing it as well. I really respect people who, are out here talking stocks, picking stocks, and then actually posting their results as well. So Christian's a great follow. Give him a follow.
All right, guys, about 10 minutes left. And then after that, the show will not end at 9 a.m. We do have a special interview coming up with Zunaid coming at 9. So make sure to stay tuned for that. Let's, Christian mentioned earnings season's coming up. We do have a couple of earnings stocks here today to talk about. Let's start with Levi Strauss. Maybe this is one I could add to the dumpster dive list. We'll see. But Levi,
the dumpster dive. I love that. I would watch that segment just for the entertainment purpose of it, not even necessarily to get stock ideas, but it's purely entertaining. You could do a good graphic, get AB dumpster diving with AB, and he's coming in here.
It doesn't have to be a graphic. We could go film it.
Good.
I'm saying I could go do it in real life, and then we'll get a little video of that. And then, if you hate the segment or if you hate the ideas, you could look at it as a way to find short opportunities. No, but anyway, Levi Strauss reported non-GAAP EPS of 33 cents. That beat the estimates by 2 cents. Revenue of 1.52 billion, missed by 30 million there. But the guidance was lower than expected. The company lowered guidance. Not great there. So the stock is trading down $2.30, about 11%, closed down almost 3% yesterday. So a little bit of a haircut here past 2 days in Levi's.
Yeah, I don't know. Maybe expectations too high here. Like, what were the so the actual numbers? Like, again, you see a stock down 11%, and I get a victim of just trading the headline there. So not going into the details here, because when I look at the actual numbers here, I see a 33 versus 31. I see a slight revenue miss, and I see EPS kind of in line. I don't see like this 11% fall. So
Well,
I'm
it's a
like,
lower guide.
what's
It was
up?
a lower guidance.
But even the guidance, so 2024, we're looking EPS midpoint 117 to 127 versus 125. So they're like slightly lower in by like 1% or 2%. And all of a sudden they knock 11% off the stock. I guess you just cannot lower guidance at all in this market. It's just unforgiving. Is this a stock that the dip could be bought on? Levi is a funny one, and retail has been tough. I mean, retail is some of the toughest stocks because there's so much separation, where you get some companies that are just hot as hell and other companies that are just cold as ice. And Levi is kind of in the middle. I can't decide, whether this is, this was an ugly story for a long time, but then it came back last year at this time when the stock went from 10 to 24. And now it's kind of in the middle here again. I tend to think that wait for some consolidation. I never buy a stock on day one of a dip because, you can see what happened with Humana after day one and then you get crushed. But I feel like this is one, if you get a consolidation period, that the dip could actually get bought.
Yeah, and I think we talked about, or at least that I asked Ryan Craver from Commerce Canal about Levi's, and he said that it was kind of like what you said, Dennis. He's like, the fundamentals are fine, but there's nothing really that like sexy with the stock right now.
Tough one.
And I said, well, they're doing a collab with Beyonce right now. That's kind of sexy, at least.
Yeah, that's true. Actually, I forgot about Beyonce. So there you go. So and they had the CEO on Mad Money last night. She was definitely promoting that they're trying to build this brand up, and Beyonce is going to be a big part of it. I mean, that's how Nike fell off. Was obviously Tiger was Tiger. Even going back, Nike always had the big athletes, like they always did. Bo knows sports. Remember Bo Jackson, all the years before your time, maybe, but I'm sure it was always advertisements. Nike was Bo knows. It was always there. He was always, but Nike always had the big name, and I feel like it's just like they maybe. And again, they have some names there still, but when you get the big names, you need that in apparel. You need that in retail because that's what drives demand. It's like, oh, my favorite artist is, wearing these jeans and they look great on her. I want to go buy a pair of those jeans. I mean, that drives demand. So you can't be afraid to spend. If you're in retail, you can't be afraid to spend to build that brand recognition.
Yeah, and I kind of just feel like the overall macro theme of apparel and retail right now, we know how much volume is going toward, your Temus and your Sheins of the world, kind of this cheap, fast fashion, which like I understand to an extent because, okay, take something like Halloween coming up. If you can get like an elaborate Halloween costume, like I want to be Jack Sparrow, and I look on Temu and I could buy like a 8-piece Jack Sparrow costume that comes with the hat and the wig and all this stuff, and it's like $15, and I know I'm only going to wear it one time, so why would I care? And I don't want to spend like $100 on this. Then I get that why consumers are going that way, but Levi's is kind of the exact opposite, where Levi has started to market itself as like an environmentally friendly, hey, you buy this like high quality pair of denims, it's going to last you for 10 years. You don't need to keep buying cheap stuff over and over again. And I think eventually you will see a swing back toward that. And you kind of maybe already have with like, I also have talked with Ryan Craver about this, but the trend of thrifting coming back where people are buying like older, you go buy like a vintage Ralph Lauren jacket from a thrift store. And like, it's higher quality material than what they produce now. So I think eventually you will start to see younger people going back to buying like high quality goods that will last a while. But right now, that's not the trend. The trend is to go to this fast fashion, cheap stuff that you can just wear one time. And that's
an issue for all these companies. I mean, that's, if the consumer is being more thrifty and the consumer is going to discount websites to buy their stuff, I mean, that's a major issue. And that's hard to build back, so Levi's going to try, pay a little bit more for our jeans are going to last you forever. I mean, it's a difficult, and we've seen, that separation happening with the discount off-price retailers. To Ryan Craver's point, who's a fantastic guest, comes on our show once a month, TJX, Burlington, these stocks have held up fairly well. And then you got the Kohl's and the Macy's and the Nordstroms that are selling these same similar clothes at full price. And the consumer is like, why am I going to go buy it at Macy's when I can go buy it at TJ Maxx? That's an issue for these companies. And that's why the turnaround for Nordstrom and for Macy's and for Kohl's isn't maybe not Kohl's as much, but still the stock has been very difficult.
All right. Well, let's keep the topics ticking here. The only reason I want to bring this up, Dennis, and it's not to bring you down or to make you answer for anything, but going back to the dumpster dive segment, I have been looking at Rivian a little bit, and I have a feeling Rivian might be kind of trading down here with Tesla. Did we talk about Tesla's price action yesterday? What happened with the delivery numbers? And then we're kind of leaking here again today.
Rivian, one issue you'll have with Rivian is the Cybertruck to a certain extent. And I watched that one video, it was like 2 months ago, not even a month ago. I don't know if you saw it on social media, and they had and I don't know like what's staged and what's real and what's not, but they had the Cybertruck and they had the Rivian truck, and both had pulled up like into like a major city, and everybody was going around and looking at the Cybertruck and nobody was looking at the Rivian truck. I wonder as the Cybertruck starts to hit more mass production that it doesn't hurt Rivian to a certain extent. Not that I think the Rivian trucks look way better. I think they're more attractive, but this whole like army indestructible type of, they're going head to head to a certain extent. And, Tesla didn't have a Rivian truck a year ago. Like they didn't have a competitor for that. And now they do. So I wonder if that doesn't hurt Rivian a little bit. I've said on this show of pure EV makers, I think Rivian can be a number 2 because we know Ford's backing off, GM, they're going to hybrids. They're looking, it's, Toyota, they're all hybriding and, they're not so much focused just on pure EV anymore because the demand isn't there for consumers. So like I would stay away from the Lucid. The Fisker was a disaster. Can Rivian be a number 2? Can Rivian be a buy? I think it can. It's a very important time for them right now, though, because the trucks are expensive just as much as the Cybertruck. And I wonder if the competition from the Cybertruck doesn't hurt them just a little bit.
Yeah, again, this is one that I would potentially build. I've been looking at it for a while, probably for the past year, as just building like a speculative starter position in Rivian, and I haven't yet. And it's kind of reaching this like lows that it might be like I guess it got down to like almost $8, but right here around $10, I feel like that's a psychological level. I might just take a stab by a few shares here around $10, and
it's a good level.
Hold for the long term and just see kind of what happens on Rivian. I'm not going to like put my whole portfolio behind this or anything, but I do think, like you said, Dennis, long term, that there is a very realistic scenario where Rivian ends up being kind of the number 2 American EV vehicle behind.
It could also be a zero. Tesla. It's not out of the realm of possibility the Rivian is 0. I'm fairly confident to say at this point in time, Tesla Q that ship has sailed. Even Gordon Johnson, is a $24 or $27 price target on Tesla. Even though he's the bearish of all bears, he's not saying Tesla's 0. There's still a scenario where Rivian could be a 0. I don't think it is either. The easier scenario is to say these things are all zeros because they don't make money. They don't really have a near path to profitability here. And the competition in this space is very intense. We've seen, Lucid. We've seen, so many other EV makers, just seem like they're going. The only reason Lucid is still alive is because the Saudis are behind it. But Rivian here, you're at a good level. I'm going to give you the 10. The 10 looks like a logical bounce point. So I kind of like it here for a bounce trade around the 10. Maybe Tesla could get a pop-up into its robotaxi event and maybe could drag Rivian along with it just off the EV. I like the 10. I like the 10 level.
Yeah, and I mean, obviously with Rivian right here, you probably could make the argument that it's kind
I've been writing it down. Rivian.
That it's kind of an election stock too. I'd imagine that Rivian does better under one of the administrations versus the other, just because I think like I don't know. I mean, I think there's going to be a lot of money flowing into continue to flow into the EVs, especially like the American companies that are making these cars. But we'll see. I mean, I think Rivian, obviously the lower interest rates should help Rivian. And that's the big question is, can they keep afloat without running out of money? We'll see.
And that's what Tesla went through for a long time. Everybody was preaching the Tesla Q. They were making cars in a tent. I mean, obviously Elon Musk behind them. I mean, obviously he, brought the company from the brink of bankruptcy, really, and it was close to, the powerhouse that Tesla has become an EV. I think it could still go either way with Rivian. I think long term it's a coin flip, but I do think 10 level, if you're a trader, is a bounce area.
Oh, Martin bought a Tesla today. Congratulations.
Hey, Martin, congrats. Helping me out. I like that. People buying Teslas, helping me out. I'm a shareholder. Thank you, Martin.
That's a productive morning. You go in, you buy a Tesla before 9 a.m. You got your new car before the market even opens. Congrats, Martin. I don't know how early you wake up, but that's a hell of a morning. All right. Well,
I'll be going to Tesla my next vehicle for sure. It's just I'm on a 2017, 2018. Usually I do trade them in every 5 to 6 years, but it's just like the sticker prices on everything now are nuts. Like I would have bought another F-150. They want $100,000. I've always had an F-150. I don't know if I can go to Cybertruck or not because, the stuff I do with my truck, I would really, the first like tree that goes on it or whatever, or crap that I'm hauling around, firewood and all the other stuff that I do up here of half bush, man. I don't know if I can stomach that in a Cybertruck, but I think I will buy a Tesla car at least.
I was even looking at them, Dennis, because they use Teslas right now.
They've gone down in price a lot.
I know. Well, like I wouldn't buy this one because it's like 105,000 miles on it, and I think the batteries start to. But like some of them are like 50,000 miles, and they're like $20,000. I'm like,
used Teslas are cheap.
That's a good deal. All right, let's bring my man Zunaid on. It is 9 a.m. Let's go ahead.
What's going on?
Whoa,
Zed, there's my man.
I love it, man. Every time you call me, that makes me happy. Good morning to both of you. Hope you're doing well. And Dennis, I will say this before you go. I remember you posting screenshots of your P&L and percentage of stuff, and then you kind of showed that, hey, I make 2% every day or whatever that percentage was. I think it was like 1.44, something like that. And then like people had to kind of understand that like it's those small gains every single day that compound into such big portfolios and not just, oh, I made 50% here. Oh, I lost 20% here. You know what I mean?
Yeah.
So
I'm a grinder.
Awesome. Yeah.
I'm a grinder. I've always been kind of going for the base hits. I never go for the long ball. I'm never all in. I'm not Rob Deere sitting there, and obviously Tiger fans back in the day where you're swinging for the fences and that's either a home run or a strikeout. I've always been base hits. I like just slow and steady wins the race. It's how I've traded for years, where I'm diversified in my trading portfolio. I take little sizable bets, often just 2% of my trading account, 2% of my investment account, multiple positions. And, and it's not sexy. That, isn't the sexy way. Like some people want to say, yeah, I went all in on Tesla, or I went all in on this and I doubled my money in 3 days and follow me because I know what I'm doing. I'm boring, guys. I'm boring, but I'm pretty consistent.
And which is why you're still in the game. Appreciate you, Dennis.
Yeah.
Talk to you tomorrow, man.
Okay, Zed. Thanks.
See ya. All right, chat. What we've been doing is having our trading competition. If you haven't heard of it, let me go ahead and quickly kind of give you a breakdown. Benzinga is hosting a trading competition where you get a chance to win up to $30,000. It is 100% risk-free. You don't have to pay a single penny to participate. All we need is your name, email address, phone number to make sure that you live in the US and Canada, so you'd be eligible. And so the competition, you can still sign up because we have 2 more competitions after this one. This current one that's going on, we have this leaderboard. And right now we're going to go and interview Benjamin, who is number 5 on the leaderboard. Benjamin, give me a thumbs up when you're ready to go. Hello. Good morning, sir. How are you?
Yeah, good to be here. I'm doing great. It's pretty early in the morning here for me on the West Coast.
You're on the West Coast, right? Yeah.
But yeah, I'm good to be here.
Awesome. Well, hey, man, look, I appreciate you waking up and talking to us about it. For the folks at home, we're going to start live trading here in just about 8 minutes or so, but I want to get Benjamin's thoughts on the competition, trading strategies, and different things like that. So, Benjamin, tell me, how long have you been trading in general in the markets?
I've been actively trading with a significant portfolio, I would say, for 3 years. And I've been in the space, so to speak, for about 4 years. I entered the market, I think, at a very unusual place. I entered at the tail end of the whole GameStop hype train. So instead of getting caught up in the momentum of people, quadrupling, 10xing their accounts overnight, I was there to see those same people who had drank the Kool-Aid lose, tens of thousands of dollars after the price drop. So I think that was a good introduction to to trading for me.
Yeah. Kind of taught you to manage your risk and not just, like Dennis was saying, not just go for the home runs. We'll talk about which trades you've taken here in a minute as well, but tell me how the trading competition has been in terms of experience for you thus far.
It's been a really good experience. Right now, I think it's still anyone's game. For second place, of course, I think first place is pretty locked down. Congratulations to Andrea. I still don't know how she did it.
We'll have her on next week, actually, so we'll get a chance to talk to her. She's got an interesting story. But so you mentioned like the prizes and things like that. So first place for this one gets 5,000, second place gets 1,000 and 500 for third. And then of course the prizes only get bigger and bigger as we go on through the other contests. So tell me how, like, what are some trades that you're kind of keeping an eye on taking at the moment? Like, is there anything in the markets that you're keeping an eye on?
I would say for the first couple weeks of the contest, I took a very realistic, I would say, trading approach. It's I mirrored trades I made in my personal portfolio because it's about the same size. And what I do is I trade on a very small time frame, and I try to take advantage of inverse momentum in certain ETFs like SPY. So when I see an outlier move made on like the 30-minute time frame, I get a notification from a macro that I made, and I take a opposing position. And because if you have significant enough position sizing, you can hit your profit goal after a very small movement in the underlying. So generally speaking, it's a kind of, I wouldn't call it pure arbitrage, but it's definitely a kind of risk arbitrage. And I made maybe 40 to 50 of these trades a day with a decent winning streak. Yeah. And it built up to like 150K.
Yeah.
But of course, I think now that the competition is entering its second half, because it ends on October 14th, I've been forced to take more risky directional trades, just to kind of keep my head above the water. And so I think in terms of next week, what I'm going to be looking at is more reliant on the unemployment data that's coming out on Friday, because I think the market recently has been kind of very nervous, has heightened volatility because of all the geopolitical stuff that's going on, and also because of the oil shock. But I think in terms of underlying, the macroeconomic situation is still firmly bullish. We have the Fed talking about 2 more rate cuts this year. We have very strong jobs numbers, consistent GDP growth, low unemployment, and I think steadily decreasing inflation. So I think as long as the market continues to see these good data points come out, we'll be able to shake ourselves out of this temporary rut and continue our monumental bull run, at least until after the election, I would say.
Well, dude, I appreciate your time here today, man. I look forward to seeing where you end up again. I know it's been a battle. And I will say this. I know you congratulated Andrea, and she's doing great. Again, had a good, awesome conversation with her. We'll have her on the show next week to learn about how her journey, she's grown the account, the paper trading account, the competition side's over 1 million. But, it's still anybody's game. There could be a lot of things where a lot of shifts can happen. I know yesterday she was at 1.3 million. So today she's a little bit lower as well. So a lot of movement happening on the leaderboard, man. I appreciate your time waking up this early. I really do. And I wish you the best of luck the rest of the way, not just in this competition, but the remaining 2 that we have. And hey, hopefully we'll see you in New York at the stock exchange.
Yeah, I'm really looking forward to it.
Awesome.
And yeah, it's still anyone's game. Thank you a lot for having me on.
Absolutely. Take care, Benjamin. See you next time, pal.
Yeah, have a good one.
Take care. All right, chat. And if you want to continue participating in this competition, again, the first one is underway, but it's not too late to go ahead and join in on the fun and overtake these leaderboards. And you also have contest number 2 and 3 that you can still sign up for. A total of $30,000 is on the line. Check it out, 100% free. You don't have to pay a single penny. And there's some cool things that Trade Zero is doing as well with some features that they're going to be rolling out. So I'll come on and show some of those things as well. How much money do you start with in the competition? It's $100,000 is that you start out with, and then you build it up. But all right, you guys want Ryan in 13. We're going to send you to Ryan in 13. Appreciate you guys hanging out with me today. Best of luck. Happy trading. And again, don't forget to sign up for the competition. If you have any questions, email